Hi everyone, welcome back to another live trading series. Today I'm going to be going over the poor man's covered call. I'm always looking for different strategies on options and how to make money. The easiest being the covered call and the cash secured put. Those are the ones I like, those are my bread and butter. But now I'm trying to figure out what else can I do to make money. Instead, let's say I want to buy 100 shares of Apple, but I don't want to tie up $13,000. What else can I do? That's where the poor man's covered call comes into place. You end up, it's called the diagonal call. That's another name for it. What you do is you buy an in the money call far out in expiration and you sell a short call against it. So if your short call goes in the money, then you have to, your shares get called away, then you exercise the one that's already in the money that you purchased. Kind of complicated. Let me go over, I researched this over the weekend. I did a bunch of scenarios and I'm most interested in Apple. It's the one I trust. It's the one I don't mind holding. With SPY, I feel like there's not enough money. So here's what I'm going to be doing. Here's my plan. Buying the January 2023, so 2 years away. I'm buying a 2-year call. Buying the January 2023 call for $6,000. And I'm buying the 75 strike. I'll kind of show you why I'm doing this. And then I'm selling the February 19th, so that's 38 days away, 150 strike, and I'll be making $161. So best case scenario is if I get called on this 150 strike, I'll be making 27%, which is like $1,600. Why this happens, so I kind of made a little summary here. Hopefully I'll zoom in. You'll get 15,000 from selling the call, from getting your shares called away at $150. I'll make 161. Let's do this. This is the premium of the call I sold. And then the minus 6,000, which is the cost of the leap. Minus 7,500, which is cost of exercising the leap. And okay, yeah, so 1,450. This is what the number was yesterday, but I just updated it this morning. Regardless, you get 15,000, you're getting shares called away, 150 for the premium. This is the cost of the leap. Buying the leap, this is the cost of exercising the leap. Might be complicated, I know, but maybe a lot of people learn by doing. So here's the issue. Do you see this? Like these two numbers, you'll need 13,700. This scenario only works if you have the money. But I guess what a lot of people want to do is keep rolling this and never get assigned or never get your shares called away. If you don't have the money to exercise Apple, then you kind of want to keep rolling it. So let's just, I do have the money, but I just want to, see what I could do. With this, let's say you only have $6,000 and you don't have the 14,000. Let's say you want to buy 1,000, you want to buy 100 Apple shares. You only have $6,000. You can do it by buying an in the money call. I'll show you how to do that on Questrade. Okay, so I do have it lined up here on Questrade. It's called a diagonal call. So see here, it says buy one. Let me move all the way to, let me show you a few things. When I'm doing research for this, people told me to choose the 90 delta. So this mimics the movement of 100 shares. 90 delta, if Apple goes up $1, my call will go up 90 cents. That's what the delta means. If you see here, $75, the strike is around the 90 delta. Okay, 89.9, close enough. This will mimic 90% of owning 100 Apple shares, and this is what I'm okay with. Why don't I go with, let's say the 30 strike, I'm at 98 delta, but then I'm using too much buying power. Like I'm paying $10,000 for it versus $6,000. Apple would need to decrease, what is this? It's at $130 right now. So 75 divided by 130. Apple would need to decrease 43% for me to kind of lose money on this. It could happen, it might not, like I'm not going to do this with riskier stocks. Like if you go back, I tried it out with Square. That's, I guess, a little risky. I don't know. None of these really. Okay, let's move on. So I am buying the 75 for around $6,000, and I'm going to sell the February 19th. So let's say 38 days away. I'm going to sell the $150 strike. So why I'm doing this, I'll be making, it'll have to go up $20. So my call would be around like $2,000 in money. Well, a little bit more in the money there, but I'm going to try this out. This lowers my cost base of buying the call. Let's say $1.61 every time. If I'm able to do this 10 times, let's say I go for 10 months. Let's see if I go plus 161 times 10. If I'm able to do this 10 times, then my cost would go down to 4,300 for this call. Ideally, you're able to keep your shares. You don't get called away, and you can continually sell monthly call options. But if I do get called away at 150, like that's where the majority of where the money comes from. I probably will make, this is a 38-day, 39-day trial. If I do get called away, I make 27%. Where did I get that from? You could see the formula. It's pretty much $1,600 divided by the 6,000 that I had to pay for this. Let's try this one out. I am interested. Let's see if I could get a better fill. I don't know. Let's say 5,800. Let's see what happens. Okay. Send. Okay, so I'm buying the January 20th, 2023 call, and I'm selling the February 19th. Let's see what happens for 5,800 US. Let's roll the dice. There we go. Oh, okay. It got filled right away. Interesting. Let's see how this works. Am I able to group it together? Yeah, diagonal. Okay, diagonal call. That's fine. So one thing you have to note, if my shares get called away on February 19th, I'll be short 100 shares because I don't have the Apple share. So you have to exercise this. Be sure to exercise this call. I hope I did this right. Guys, if I'm doing this wrong, this is my first time doing this. Let me know. Let me know if I'm messing something up. But I don't mind getting called away at 150. I'll just exercise this call. Okay, so now that that's in the bag, what else is there? Let me go back. If you want to see some of the money you'll make on the other ones, if you want to do SPY, you can buy the January 2023 250 strike for SPY. It's $12,600 though. You could sell the 400 strike call and then make 20% if that does happen. But SPY would have to go to 400 in 38 days, which to be honest, it could. You could do the same with Square. I played around with a year difference with Square. Check this out. Buying the 100 strike for Square, the difference in 1 year is only $300. You're only paying $300 extra for an extra year. I would always go the further expiration. You're not saving much by going here. You're giving yourself more time. You're paying $300 for a year. I would 100% do it. Some of the other ones like AMD is great. If you buy the 50 strike January 22nd, 2022 AMD, and you get called away at 115, you'll be making 40%, which is insane. I don't know if, sorry, you guys hear the dings. I don't know if AMD could hit 115 by February 19th, but these gains are insane. Some other things I wanted to do. I'm not big into Bitcoin and all the crypto. I don't really understand it, but something I can't ignore, take a look at the IV on these. So Mara and Riot, 300% IV. It's hard to ignore these. And then this has 200. So let me go out 1 month, see what it is. The IVs are on 250. I'm going to sell, let's say on Mara, I'm going to sell the 11 strike just to get $100. Mara would need to decrease by 50%, which could happen. But, if that does happen, I'll just, get assigned. It's only, you know what? I might do 2. Like I'm only tying up. This is $1,100 if I get assigned. Why don't I just do 2? Same for Riot. Let's see a 50% decrease. Let me buy 2. Ooh, I do want $1. I want at least $100 for each. Let's do this right now. Mara. Let's go February 19th. Let us find the... I want to make at least $100. 12? This is weird. Okay, let's go right here. I'm going to sell 2 cash secured puts. The midpoint, 1.2 2, 2, 2, 3. Let us sell. What does this give us? So change in maintenance excess, $1,300, no big deal. I'm making $240. We'll see what happens. It's a month away. I don't mind getting assigned at $12 for Mara. Let's do the same for Riot. Riot. Let's go 50% decrease would be around $11. Ah, okay, this changed. Damn. I do want to make at least $100. Let's roll the dice, see what happens. Everything comes with a little bit of risk. 1.18. Try to choose the midpoint just to make a little bit more money. Okay. Here we are. $236. Let's see what happens. Let's open orders. I do want to get filled, whatever. Something I want to show you guys. What do I want to show you? What I did last week. I wish I was able to. AC.to. Take a look at this. 4 days to expiration. I sold this last Friday, so it's like 7 days total. I bought 1,000 shares of Air Canada purposely to sell 10 covered calls against it at the money. So if we take a look at my return, so I bought at $22.91 and I sold it for 59 cents each share. If we go 0.59 divided by 22.91, that's 2.5% for 1 week. If I get, it doesn't matter what happens to the call, like I still earn this premium. So that's mine. So the $590, that's mine forever. And it looks, you know, if it closes under 23, I'll just sell another at the money covered call. I do feel like this was too good to be true. I don't mind holding 1,000 shares of Air Canada. It is one of the stocks that I think might double this year. So I don't mind selling at the money call. So let's say Air Canada closes under $23 and then I want to sell another one for next month. Let's take a look at this. So AC.to. I'll sell at the money. So another at the money is 160 for the 23 strike. Let's say 160 divided by 23. So it would be 6.9% just doing this. So another strategy that I'm doing is selling at the money calls. I know I could be selling puts, kind of the same thing at the money puts, but I just wanted the shares in case something happened. So I am excited to see what happens with this, and I'll keep you guys informed. Other things I want, like other trades I have planned, are Workhorse. I am waiting for a red day on Workhorse. Where did it go? So Workhorse has kind of been shooting up, I think like 20% in a week. I'm more comfortable owning Workhorse around the $20 strike, not really $26. We'll see what happens there. I do want to sell around $5. But yeah, that's it for this video. Let me know if you have any more questions on the poor man's covered call or the diagonal call. It is my first time doing it. Let me know if you've done it and what happened. My biggest issue is, you know, the biggest issue is if you don't have the cash and your shares get called away. You don't have the cash to buy and exercise. Yeah, I guess that is the scariest part. But on something like Apple, I don't see it decreasing 40%. It could, but who knows? Thanks for watching. Tune into the next one.